Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into the action here on this Monday, July 14th, 2014. All right, number one, markets are having a solid rally on the back of a little bit of optimism emerging on the back of Citigroup's earnings. Citigroup reported earnings this morning. Very strong results from them, and you can see, again, the stock here is up 3%, $1.44. That's actually a big move for this stock. It very rarely has this type of move to it. So, interestingly enough, it's faded off the highs of the day, as has the markets. But still, we are seeing a move to the upside across the board. Right now, Dow is up 120 points, NASDAQ up 29, S&P up 10 points. Now, a couple things that I think are worth going over. Number one, today is a very ominously quiet day compared to last week. So last week, we came back from a holiday, July 4th, and, for the most part, you would have expected a quieter week, right? But that wasn't the case. We actually got a very volatile, in fact, the most volatile week we've seen in quite some time. Initially, last Monday after the three-day weekend, a drop in the markets, then a second drop, then a big rally, then a big gap down, reversal, and you can just see the choppiness. Today, look at the spiders. Look at the ratio here, the range we've been in. Literally a 42-cent range on the SPY. So to me, what this tells me is that today's one of those hangover days a wild week oftentimes gives us. It's also the market telling us that everyone is waiting for more information. So today we got the Citigroup numbers. Generally, there's a little bit more optimism than there was last week off of that, as well as a few other things. And then you also have to remember this is a huge week because Janet Yellen is testifying in front of Congress midweek, and also there is a huge amount of earnings. All right, earnings from Intel, IBM, Google, Johnson & Johnson, Goldman Sachs. I mean, you could go on and on, folks. There are a ton of earnings now that will be released, and I think the markets from the gap up. Now, the gap up was the factoring of Citigroup's earnings, so that caused the gap up. The reason why the markets haven't really moved since is because people are just on hold now. All right, they're just waiting. Now, interestingly enough, there are some big moves out there that are occurring, maybe not in the indexes, but if you look at the GLD, take a look at this hammering today. So again, this is the difference in optimism versus the negatives, right? So gold, a little bit of fear last week drove gold up. Fear literally vanishes. You see the VIX taking a hit today, which is the volatility index. Look at gold's gap down today. And again, if we go to the daily chart on the GLD here, you can see it very nicely. So gold's been trading up very sharply recently. And look at that move on Thursday. See that reversal candle right there? That gap up and it kind of faded. And then look at this drop here. Just a huge gap down. You eclipsed. This is what's important here on the chart. See the lows here? See this trend line and the 20 MA? You actually gapped below the lows of all these candles, wiping out this entire move up. And now you're inside of this green bar right here. Now, what this tells me is you'll probably get a little bit of a pause on gold, but ultimately it should trade lower into this area. Gap window, upsloping trend line, two moving averages. This general vicinity is probably what you touch in the next few days. So watch that very closely, folks. I think that is going to be a very interesting level. Now, a couple other things to go over here. Oil today, basically flat, and you can see off of Friday's move down, we had a sharp move down. There's actually a lot of support in this range on oil. Number one, let me just see here. So number one, we have a little bit of a trend line that we're just below now. So you can see we're just below it, but there's no confirmation. And oftentimes on a little bit of a panic sell, you'll see a pierce of that line. But I actually anticipate a little bit of a bounce on the oil chart off of this range. Now, if it continues down, you'll hit the 200, but again, I think at least in the short term, you'll get some sort of minor bounce, and that's what we have to kind of analyze and follow to see if we get any sort of significant move up, or is it just kind of a bearish pattern, which is a sideways slow move, and that'll tell us more about the next move coming in oil. Based on the sell-off here, I actually think you'll get a small bounce, maybe back to this 50 MA here, and then I think you actually roll over and head lower. So just something to keep in the back of your minds, guys, going forward. All right, a couple other things out there. With the Citigroup earnings today, we are seeing JP Morgan Chase have a good bounce, although, again, all these financials are well off their highs of the day. Look at the intraday on JPM. High was put in first candle, and it's slowly fading. If we take a look at Goldman Sachs generally the same thing, although a very quiet fade at that. But again, the highs were made early on. Just like if you go to Citigroup, which is having a great day, $1.47 higher, Here was the high of the day, and it's generally faded since then. So financials, again, strong day because of earnings from Citigroup. Optimism out there around the financials kind of reemerging, but they are not performing and continuing to outperform the market. They are outperforming, but not since the open, really. They've faded since then. All right, a couple other stocks out there worth a note here. Apple is having a good move. Apple got an upgrade today. So funny how this happens, folks. I mean, if you remember in 2012 when Apple was at $700 a share and it was upgraded, that was the top. Well, guess what? You're basically, if you reverse the split, you're trading just underneath $700 a share now, and you're starting to get upgrades again. And again, an upgrade came out today. I think it was Barclays who upgraded this to a $110 price target, which, by the way, would be a $770, I believe, if I calculate that correctly, based on pre-split numbers, $770 target. My guess is this probably does go back through 100, but I think it stalls out very quickly at that point. All right? And again, it's so funny how these analysts, they get caught up in the momentum and the kind of the hype of things. Apple, if you look at the chart, right? I mean, let's bring up the daily chart of Apple here. I mean, look at this move on Apple. Okay, and here's your double top up here just on a Pierce of 100. This one was inconsequential at this point. It hit a little bit and pulled back there. But the point is, how do you upgrade a stock now? I mean, look at the move. Post-split numbers from $50 to almost 100. It's almost up 100% from its lows, a couple years ago. And now you're upgrading it when it's so close to double top. I just don't understand that. Okay, and again, it's essentially that's an emotional-based upgrade. If I was an analyst and I made a wrong call about a stock, which I've made my fair share of wrong calls out there before, but then you admit it, but you don't try to make another wrong happen. Okay? And that's what a lot of these analysts do. They get caught up in the hype, and when the stock's now at its highs and they were wrong, then they upgrade it, and then they run it wrong again because it rolls over, just like in 2012. So, these type of things have to be made aware of, and I think it's important for us as investors to not get caught up in that. There's no way. I mean, do I think Apple has a little bit of upside? Sure I do. Double top-ish, yeah. But I'm not going to put my money long now when I'm chasing. I mean, that's classic chasing. It's one of the biggest no-nos in the world. All right, another stock of interest out there, Alcoa. Look at Alcoa's move, by the way, since October 2013. Over 100% move now. Do I think it's almost done? I do think it's getting close. I'll show you where it's done. All right, right here. All right, so this is your double top right here. It's right above $18. So you basically have another $2 potential upside. Now, it could stall out and consolidate before there, but I think ultimately that's where it's going to head back to. And once it gets to 18, I think that will be a very significant pullback. Okay, so we'll watch that very, very closely here as well. A couple other stocks I'm keeping an eye on, and I'm going to be putting out a new trade alert this afternoon for those of you that are interested. But number one, you have Twitter today trading up. A lot of the high beta stocks were weak early, and then they've come back with a vengeance. You can see here on Twitter, it was kind of strolling a little bit and then took off here. Take a look at Netflix today. Netflix up about $14. That's a strong move today. And Tesla as well was weak early and then just had this monster move up. Now it's stalling out. But the high beta stocks have been under a lot of pressure, but they have come back with a pretty solid vengeance at this point. And I think that's something we should take note of because what that usually means is that people are less risk adverse. They're willing to take more risk. And again, that's you usually have a little of that and then the next little small pullback in the markets. And so far, every pullback we've had has been small. But the beauty of it is we are coming into a major cycle, and that should be something that actually turns the deck. Now, it won't happen instantly. What you're going to see is this topping kind of stuff. And you actually saw it last week beginning a little bit because you saw the market kind of starting to get weak when usually after a holiday you'd have a stronger market. And now you're seeing a bounce back up, and we haven't hit the cycle day yet anyways, so you could even make a new high. I still think the NASDAQ could hit 4,500 briefly, and I think the S&P, which is only 23 points away from 2,000, could actually hit 2,000 before we really see that top put in. But I do think once that top is put in, you will see a pretty significant top longer term. You'll look back a year from now and say, wow, that was a pretty amazing pullback on the markets. We should finally get our 10%er at least, which we've been looking for ages at this stage. Everyone in the market's been wondering where that 10%er pullback will come in. Okay, a couple other things out there. Take a look at the IBB today. IBB's up $1.64, a little bit of a pop up there on the IBB. I did have this last week as a swing trade alert, and we took profits on it already, and that was exactly the right move. If I show you the daily chart, take a look. So we shorted the IBB right up here, and we took profits right into the 20 MA right here. So you can see how smart that was of us. And we're smart about it in terms of, as an investor and a trader, you must know that right now, especially before the cycle has hit, that these stocks mostly will bounce back after they have a deep fall. Now, once the cycle takes hold, then you're going to see a bigger fall. But right now, anyways, the markets are in a position where they're giving big bounces, things are snapping back, and just take your money and run. That's all it means if you're going to be on the short side like this. So that was a nice trade from last week. Also, the Elite Roundtable here at InTheMoneyStocks.com continues to kill it. Those guys are great there. So I encourage you to take a look at the Elite Roundtable, join up, get those trades as well, as they are a huge amount of winners lately. Over the last couple of weeks, they've just been killing it, and the profits are there to be had, guys. Just a matter of if you step up and you take advantage. Have a great afternoon, great evening. Thanks as always. Come join us at InTheMoneyStocks.com.